Investors have the weekend to recover from the Wall Street meltdown that we saw in the past 2 days. But the question is, will Monday bring change or will the markets continue to fall? Joining us to talk about the stock market is Corey Johnson. He is Chief Market Strategist at Epistrophe Capital Research. Corey, thank you for joining us this early in the morning.
Thanks for having me.
Well,
Thanks for having me.
Yes, thank you. We understand that you were actually there on the floor of the New York Stock Exchange yesterday and saw firsthand this drop. We've seen stock market volatility before, but tell us how it felt yesterday, and did it feel different from other swings?
So this is a really significant sell-off. In the last 2 days of trading, the S&P 500 average is down 10%. That's only happened 4 times in the history of 5-day trading in the New York Stock Exchange or of the markets in the U.S. So this is one of the worst periods this week ever in the markets. And it's entirely about the tariffs coming out of the White House and the concerns that the tariffs are going to push us into a recession.
And let's talk about that and go into a little bit of a deep dive there. More than a 5% drop there for the Dow, as you mentioned, very significant. And we're hearing about the factors from China with their basically their retaliation in the 34% tariff that they decided they were going to impose yesterday, and also the so-called Magnificent Seven. Can you break down what some of the factors were yesterday?
So let's talk about the tariffs. So the tariffs are extraordinary, and I think that they really surprised Wall Street in 2 ways. One is how wide they were, how many countries were affected, that companies that listened to President Trump 8 years ago moved their manufacturing out of, like Lululemon, moving their manufacturing out of China to Vietnam, and then finding out that Vietnam was going to be slapped with these huge tariffs, and it was to no advantage. All their investment in Vietnam was for naught. The size of the tariffs was a big deal. China, some of the Chinese products are now at 50% effectively because there were already tariffs. These new tariffs are on top of those. And the breadth of the tariffs, that we're putting tariffs on countries in Africa, on Madagascar, countries that don't really import much at all to us, that aren't sending us fentanyl, that aren't taking advantage of us, and that this really seems to be a chainsaw approach to slapping tariffs everywhere, which is going to raise prices for U.S. consumers, which most economists think it might push us into a recession right now. And I think the other thing that really surprised Wall Street, and again, it's not just yesterday, it's been going on for weeks, and really the last 2 days, 3 days have been so dramatic in the sell-off because it's been so consistent and so broad-based. Because the tariffs, I think a lot of people here on Wall Street believed it was going to be a negotiating ploy. It was going to be surgical. It was going to be, let's go after Canada and see if we can get a better price on aluminum. Let's go after Mexico and see if we can get a better deal for car parts. No, what this is, it's been not surgical. It's not careful at all. It's such a broad swath, and it doesn't seem to be being used for negotiations at all because so many countries are affected. I think that's really surprised Wall Street. And again, almost all of the economists on Wall Street are now predicting a recession because of these tariffs.
We did see J.P. Morgan say that yesterday. Real quickly, I want to ask you about that negotiation point that you mentioned, because we haven't seen significant results in any deals, negotiations. How long do you think the stock market can bear this before we start to get into some serious damage that might not be able to, be undone?
Well, let's be clear. This is serious damage. We are in correction territory, right? We're down more than 20% in some important indexes here. And there's more bad news to come. The Europeans are probably going to respond with counter tariffs again, coming probably on Monday, and the market's not going to like that. Recessions are real. What we're talking about here is prices going up for individuals, people losing jobs, hiring slows down, that turns into layoffs. We know this in the Bay Area, right? We know what cyclical economies do to us. We know what layoffs look like. We know what happens when IPOs don't happen. That's the gravy on the top of a good economy. But what we're talking about here is growth coming to a halt. People losing their jobs, people facing real hardship, and the people that don't get affected by this, and this is all meant to, use tariff income. The president talks about it for cutting the deficit, but with the tax cut also in the works in Congress right now, this really affects middle-class people, poor people. This is where it really hurts the most.
And let's talk about that too with investors, because some of them are looking at their 401ks, looking at their retirement funds that they had thought was going to be, fairly stable, and seeing this fluctuation. We always hear stay the course, but what about someone who might be close to retirement, might be relying on some of those funds? What do you think they should be looking at right now?
Well, I think it's terrifying for those people, and I will say that the important things to pay attention to are over the long haul. And look where you were last year, and look where you were 5 years ago. But as you get closer to retirement age or closer to the age at which you want to touch that money, you might want to move into more conservative things. I don't give stock advice, but I think that people trying to chase quick gains, the time to do that is not right before your kid goes to college, because I got lots of kids in college, and also not right before you're off to retire or want to spend that money. And so your investment decisions have to change in those periods. But I think that the callousness with which these decisions are being made out of the White House and with the effects on people who aren't billionaires. The billionaires still have billions. They've lost a lot of money, sure, but they've still got billions. But for people who are really counting on the money that they've saved up and invested, this is a terrifying time for them. And I wish I had kind of a softer, nicer things to say about what's happening right now. But I do think there's a lot of bad news coming yet to happen here, because what we're hearing from the president is this notion about tariffs that doesn't subscribe to what has actually happened. The actual experience of economists studying tariffs, of our experience of tariffs over 150 years, is not what he's describing. And so it makes you wonder what's really going on there. This negotiation for deals, one of the things happening in the White House is now President Trump has the ability to go to people that do the things that he wants, whether it's contributing to his library or people who contributed to his campaign, or God knows what other deals he's going to make with them, and saying, we can exclude your products from the tariffs.
And
Hey, Apple, you've done some things for us. We can special deals for you guys. But that's a concern of the power the White House now has by letting selective loopholes through these tariffs.
And we often see that lobbying to try and get exclusions. Corey Johnson, we're going to have to leave it right there, but we certainly appreciate your taking time to talk about this. It's something that's top of mind for so many people. We hope to see you again. Corey Johnson with Epistrophe Capital Research. Thank you.
Thank you.
Okay.